am Deidre Quinn, and welcome to Pending and Trending, a podcast that started in real estate and grew into so much more. Here, we talk about the power of building wealth, creating opportunities, and designing a life that lasts for generations. With expert guests and real conversations, my mission is simple: to help you elevate your journey and build the legacy you deserve. Welcome back to Pending and Trending. I'm here today with Brian Kiczula. He's the founder of Cost Seg RX, a Sarasota-based firm specializing in cost segregation and real estate tax strategy. He's been in the real estate world since 2002, and then he started Cost Seg RX in 2020. He's overseen thousands of cost segregation studies for properties ranging from single-family homes to larger facilities. He's an active member of the American Society of Cost Segregation Professionals, and Brian also hosts the Real Estate Explainer podcast, where he breaks down complex tax and depreciation strategies for real estate investors. I'm so happy to have you on. Thanks for being on with me today, Ryan.
Thanks for having me.
So, for people that are just starting their investment journey, what exactly is cost segregation? Can you explain that?
Sure. Yeah. Cost segregation in a nutshell. So basically, when you're looking at a property, we're looking at the property as individual components. So think about the exterior first. So the outside of the property, you're going to have your landscaping, your driveway, your sidewalks, your fencing, swimming pool. All of those are site improvements, so 15-year assets. So we're breaking the building down or the property into its individual components and then assigning the appropriate tax lives. So think about the inside of a property. You have your appliances, your refrigerator, your washer, your dryer. Those aren't 27.5 or 39-year items. Those are 5-year assets. So we're really carving out those individual components and assigning the correct tax life. And then based on, depending on when you acquired the property and placed it into service, you can take up to 100% bonus depreciation on those assets. So that's cost segregation in a nutshell.
And then at what size or cost of a property would you say, yes, it makes financial sense to do a formal study?
I think it just depends. I recommend that clients, when they come to me and they ask for an estimated benefit, just tell me what you have and we'll look at it. Some clients own Airbnb properties that are worth multi-million dollars, or strip malls that are worth multi-million dollars, absolutely on those properties. But when you start looking at smaller residential studies, 300,000, 200,000, 100,000, you just have to look at the ROI on that property, meaning what does it actually cost to do the study? And then what is your benefit going to be? So I don't answer that question for them. I just say, let's work up an estimate of benefit, take a look at it, talk to your tax preparer, maybe a financial advisor if it makes sense, and move forward. We also have clients that do capital improvements to their properties every year. So they'll buy a property, go in and do maybe light remodeling, or they'll remodel the entire property. We'll look at those studies as well and do small capital expenditure studies. That way their kitchen remodel isn't all getting lumped into a 27.5-year depreciation life.
Okay, so what inspired you to go in this direction? You were in the real estate world since 2002, and what inspired you to then start this business?
Yeah, sure. So I had to step out of work basically for an entire year. I had an illness pop up, couldn't work, and while I was trying to figure out what I was going to be able to do, when I decided to get back into the work market, or workplace, if you will, I knew I couldn't go back and do what I was doing. The light bulb went on my head. I'll do tax returns. That seems like a low stress, easy thing to do. So I jumped in and I started doing tax returns, and quickly realized that tax prep wasn't really where I wanted to be at. But I stumbled into the world of cost segregation, which married my real estate background with taxes. And it allowed me to stay in the real estate space, and it allowed me to stay in the tax space. And I just married the two and fell into cost segregation. So that's how it happened.
So how can real estate agents and entrepreneurs that are investing, they can save so much money by understanding what you do and by understanding what those implications are. What's your recommendation as far as what should they do to save on those taxes? What should they do to pay less taxes? What are your initial things that you look at?
So I think it's education. So I would say just educate yourself if you're a new investor or even an existing investor. Certainly if you're a real estate professional, you're a real estate agent or broker, and you're working in the market, is just really understand what cost segregation is and the power or the real benefits that it can provide to your clients or yourself if you acquire specifically investment properties. Then you can tune or fine tune what you're looking for a property so that it really helps you maximize or provides real tax savings when it comes to depreciation and provides the income that the real estate is going to generate and the appreciation over time. And what I mean by that, it's just understanding that not all properties are the same. You're based in Philadelphia, in the downtown area. And if you look at a property in, let's call it a row home in Philly, typically they're on a very small lot. You've got the houses right next to each other. So you're not going to have the site improvements. You're not going to have the landscaping, the fencing, the items that we would reclassify as a 15-year asset. But you may have the interior improvements, the removable flooring covers, the appliances, items like that. So just know that those specific properties in downtown markets typically don't have the site improvements. But if you go up north, up to, we were talking about it, Langhorne, Bucks County, those properties typically have very large lots. You're going to have the fences, you're going to have the swimming pools, you're going to have the site improvements. I know there's horse property up there. All of the items that are on the exterior of the building are going to be those 15-year assets. So it's really understanding what type of properties are going to have the most short life assets, and then just talk to your clients about it. Maybe really figure out what their needs are. What are they looking for when they're looking at investing in properties, or if you're an investor yourself, what are you really looking for in that property?
That's great. So what's one of the most expensive mistakes investors make when they try to handle property depreciation on their own?
It's 100%. It's the land allocation piece every time. Land is a non-depreciable asset. There's a couple of them. There's a couple of big ones. So land allocation is the number one, really monkeys things up. If you file your tax returns and you don't pay close attention to the land allocation and someone assigns a really large land allocation, it's eating into your depreciable basis. Land is a non-depreciable asset, so it needs to be backed out of the acquisition. So let's say you acquire a property for $500,000 and you pull the county tax records and it says that 80% goes to land allocation, and whoever's filing your taxes just follows that and assigns 80% of that entire purchase to land. All of a sudden, or a majority of your depreciable basis is gone. So pay close attention to land allocations. That's number one.
Wow, that's great advice. So my understanding is those depreciation rules are constantly changing. Is that right?
It just depends on the tax laws that were in place at the time. So depending on when you acquire the property, the Tax Cuts and Jobs Act was brought back 100% bonus depreciation, and then it started to phase out. So 2023, it started to phase out. So if you acquired a property, I don't know, call it 2022, you were eligible for 100% bonus depreciation. But then if you acquired a property in 2023, all of a sudden it's at 80, and then it's phasing out. But now with the One Big Beautiful Bill Act, it's back at 100% bonus depreciation for properties acquired and placed into service after January 19th, 2025. So acquired and placed into service. That's a big takeaway.
Got it. So what is there a question that you would say that investors should ask their agents or the people advising them before they purchase a property?
As far as questions, I would say it's a good idea to get them in contact with a cost segregation professional, someone like me who can work up an estimate of benefit if it's something that they're interested in. The estimates are free. We'll take a look at the property, come up with an estimate of what we think we'll be able to find on that specific property. And we can do that before you make the offer on it. So if depreciation is something that you're interested in as part of the acquisition, then to bring us in early and have us look at working up an estimate. You wouldn't want to acquire a property thinking you're going to get a bunch of depreciation, and then all of a sudden it's a vacant lot. There's nothing to depreciate.
And so while we're on that, can you just share with our listeners where they would find you?
Yeah, it's easy. For me, it's the website's really the best place to find me. It's CostSegRx.com. I'm not a heavy social media user. I tend to scroll and there goes the entire day. So I try to limit my social engagement. But yeah, the website's always great. And I like to think quite a bit of good information on the website as well. We try to put out 2 blog posts per week that really cover some of the basic information when it comes to cost segregation, 1031 exchanges, in cost segregation, short life assets, whether it's 5-year property, 15-year property, and then residential properties versus commercial properties. We're always trying to provide a little bit of, just education or, things that I find out along the way. I mentioned 1031 exchanges. I was just on a class the other day. It was a subject matter expert with the IRS, or a former IRS subject matter expert was teaching the class on 1031 exchanges and how to correctly calculate the carryover basis, excess basis, and then really look at the parts that we can do cost segregation studies on. And that's some of the information I try to add to it, just the knowledge as I come across it.
I saw you had some great things on your website. I was on your website earlier, and you have a lot of educational pieces on there. So I highly recommend to our listeners that they check out your website. Where do you see the biggest untapped opportunity for people to protect their income this year?
So protecting their income, geez, I don't know. It's one of these volatile years, I think. I'm a little concerned about what I think everybody is. What's going to happen with the stock market? What's going to happen with inflation? What's really going to happen in the world? And real estate, it's one of those things. If you can find a good deal on real estate, if you can buy a real asset that's generating income, I would never encourage someone to buy a property just to do a cost segregation study so they could accelerate the depreciation. I was talking to a client just actually yesterday because they're actively looking to acquire a property, and it really comes back to it. What asset are you buying? What are you doing? This specific property was an Airbnb they're looking at spending quite a bit of money on it. And it's not just looking at that asset as an Airbnb, but it's looking at the location. If the Airbnb market softens up, will you be able to rent it long term? What's that asset really look like? So when it comes to protecting your money, I would say look at real assets. I think real estate is such a great investment opportunity.
That's great advice. Do you have anything that you would like to share with our listeners that I haven't covered?
As far as cost segregation studies go, I think that everybody's specific scenario is so unique, and you can find a never-ending supply of information out there. I think that it's so important that if you're looking at doing a cost segregation study, if you're looking to buy a property, if you're looking to do any type of specialized tax work, that you bring your advisors or your trusted group into the conversation and have everybody talk about the end goal that you're looking to achieve prior to moving forward and doing anything. So one of the things but my real mission is to provide accurate data and personal service to every single one of our clients. And what that means is call us, give us a call, talk to us. Let's see how cost segregation really fits into what you're trying to achieve.
That's great.
So yeah,
that's great. Now I understand that you are also going to give our listeners a complimentary estimate for their investors or for themselves. Is that correct?
Yeah, I recommend that anybody that's interested always just get a free estimate of benefit. We're going to take a look at the property. It's a little bit of heavy lifting on the front end because we are reviewing the property. We're going to look at the basis. We are going to pull the county tax records. We want to see what the land allocation is, since land is such an important component of that. We're going to back that land allocation out. We'll talk to you about that to make sure that's a reasonable land allocation. And we'll work up the estimate of benefit so you can see what it looks like. And then it's not just finding out what your potential accelerated depreciation is on the property. It's also looking at what is your real effective tax rate. Are you really at a 37% tax rate, or are you at something less, 24? What's your real effective tax rate? That way you can calculate the true return on investment from moving forward with the study. So yeah, absolutely get a free estimate of benefit if it's something that you're interested in doing.
That's great. Thank you so very much for sharing all of the valuable information that you did today. I appreciate you being on with us.
Oh, absolutely. I was happy to come on the podcast and talk about it.
And that's a wrap on another episode of Pending and Trending. A huge thank you to Cost Seg RX founder Brian Kiczula for breaking down the power of cost segregation and helping us better understand how smart investors use tax strategy to build and protect wealth. From bonus depreciation and land allocation to understanding how different property types impact your returns. Today's conversation was packed with valuable insights for investors at every level. If you're considering purchasing an investment property or want to explore whether cost segregation could benefit you, Brian has generously offered listeners a complimentary estimate of benefit to help you understand the potential opportunity. Until next time, remember, wealth is built through knowledge, relationships, and the willingness to think differently. I'm Deidre Quinn, and this is Pending and Trending. Thanks for tuning in to Pending and Trending. Remember, generational wealth doesn't happen by accident, it happens by action. If you liked today's episode, share it with a friend, subscribe, and let's keep elevating your journey together.